December 25th, 2025, Christmas morning. While families were unwrapping gifts and laughing around the tree, Bitcoin traders were unwrapping a nightmare. In a single heartbeat, the price of the world's most volatile asset flashed down 70%, from $90,000 to just $24,000 on the globe's largest exchange. Screams echoed across trading floors and Discord servers. Was this the end? The death of the bull? No, it was a glitch, a liquidity vacuum on an illiquid BTC-USD1 pair. Bots snapped it back in minutes, but that fakeout was only the prelude. In the shadow of that flash, a real brutal collapse was already brewing. Bitcoin, the digital gold that promised revolution, had already shed 30% from its October peak of $126,000. By December 27th, it hovered around $87,000, down 28% in a month that felt like free fall. This is the story of Bitcoin's Christmas bloodbath, how the bull broke, and what it means for the $2 trillion crypto empire. Just 6 months ago, Bitcoin was unstoppable. Fueled by a pro-crypto White House, spot ETFs were sucking in $50 billion. Wall Street piled in, JP Morgan, BlackRock, calling it digital gold 2.0. By October 6th, BTC shattered $126,000, a 110% yearly gain. Whales accumulated. Retail FOMO hit fever pitch. I spoke with a young trader in Miami who quit his job and went all in at $100,000. He said, "Lambo by Christmas, baby." But euphoria has a shelf life. Mid-December, Van Eck warned volatility had spiked to 45%, the highest since April. The bull was overextended, and the bears were sharpening their claws. It started with a whisper from Tokyo. December 1st, Japan's 10-year bond yield hit 1.877%, a 17-year high. The Bank of Japan signaled rate hikes. The era of free money was ending. Enter the yen carry trade unwind, a $3 to $20 trillion arbitrage beast that had funded everything from tech stocks to Bitcoin for decades. Borrow cheap yen, buy high-yield assets, repeat. But as yields rose, the yen strengthened 5% in a week. Leveraged positions flipped unprofitable. Margin calls hit like dominoes. By lunch on December 1st, $646 million in crypto positions had vaporized, mostly longs. BTC plunged 6% to 86,000. ETH followed to 2,700. November's $3.45 billion ETF exodus, BlackRock alone down $2.34 billion, only accelerated the bleed. As one analyst put it, this wasn't about crypto, it was the cost of capital collecting its due. Mid-month, the pain deepened. Bitcoin tested 82,800, the 2-year simple moving average. A break there historically screamed a 51% correction, just like 2022. Gold, the real safe haven, surged 20% year-to-date, while Bitcoin lagged. Correlation to NASDAQ hit 46%. Bye-bye uncorrelated hedge. Then, on Christmas Eve, Bloomberg's Mike McGlone doubled down. Bitcoin to 10,000, he warned, echoing 2018's 80% wipeout and dot-com parallels. Low VIX, over premium to gold, recipe for the great reversion. Now let's talk about the human cost. Meet Alex, a 32-year-old from Chicago. He went all in on Bitcoin at 110,000 via Robinhood. December's 20% dip erased $50,000. He told me, voice cracking, I thought it was forever. Stories like his flooded Reddit. Suicide watch threads, margin call bankruptcies. Globally, $1 trillion in crypto market cap evaporated since October. But amid the pain, there's always opportunity. As one post on X quipped, December crash, proven dip buy setup. So what's next? December 18th, The Bank of Japan hiked rates to 0.75%. If they keep going, Bitcoin could test 75,000. If they pause, we might see a short squeeze back toward 100,000. JP Morgan is eyeing a rebound to 170,000. Bears like Mike McGlone are betting 10,000 by 2026. Changeley forecasts 93,000 by December 29th, a modest 5% bounce. Plan B's stock-to-flow model still screams rebound. But volatility is the tax on freedom. Hold 82,800, the bull stays intact. Break it, brace for impact. Bitcoin's Christmas bloodbath wasn't a death knell, it was a reality check. In finance's casino, bulls feast, bears starve, but the house always wins, until it doesn't. What's your play? Thanks for watching. If you're still hodling, drop a like, comment below, crash, or come back. Hit subscribe for more unfiltered USA finance documentaries. See you next time.